Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of May 5th through 9th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. Take a look down at the description box down below to start that trading journey with us. With that, let's get into the market. First of all, happy Cinco de Mayo, right? So for the markets, okay, I just don't know how festive we can get this week because, well, of how much we've already moved so far since April lows. And again, we've been doing a perfect job navigating the market. So let's give ourselves a great pat on the back, right? Now, with this big move up higher, I mean, if you just take a look on the weekly time frame, right? This is a very, very nice move up higher. It seems like we are about to achieve a potential V-shaped recovery. Now, based on all the macro issues that we're facing that I've written in the report for this week. So again, make sure you guys read the report first before you watch this technical analysis video. The markets can get a little bit shaky here, especially as we head into a very critical week. And again, why is this a critical week? Well, you guys should know that because of what I've put in the report itself. So make sure you read the report. So based on all the events and catalysts that are happening this week, along with the macro headwinds, the markets may not be seeing a very V-shaped recovery, even though we've essentially achieved about half of it here, or actually more than half here at this point, of a V-shaped or V-shaped looking recovery back to the upside. Now, as I've already explained multiple times on SPY, we have a pretty easy, quote-unquote easy, target for the current intermittent bounce that we've been looking out for. And that is that supply area between 570 to 574.50, or if you just want to round up, 575. Now, we also have that previous pivot high point, as seen here, indicated by this green arrow, this downward facing green arrow, at 576.41. And in previous streams from last week, I've also highlighted that if we were to come back to retest 575, and if the momentum is strong enough from the bulls, and if we really wanted to continue this V-shaped recovery, we would have to break over this previous high point price of 576.41. Now, here is the deal, right? Is it possible that we can see a break over this previous pivot high point right away this coming week? Probably not, right? Because again, look at how much we moved straight to the upside since April's lows. This is a massive recovery back to the upside, right? This is more than half of the downward move that we had since the beginning of mid to late February. So with that in mind, if you just take a look at the technicals here as well, if you remember from last week's video, right, we've been looking at the weekly 21 SMA as well, right, and on the previous streams as well from last week. And this weekly 21 SMA is now slowly coming back down to converge with this 574.50 level, or again, 575 if you want to round up. It doesn't really matter. It's only a 50-cent difference. And if the price continues to move up higher this week, early into this week, right, maybe even to tomorrow and on Tuesday, there's a good possibility that we can see a convergence point, a coinciding retest of this 574.50 level along with the weekly 21 SMA. But then again, the complete opposite can happen, and we can see this occurring, this retest, this coinciding retest happening at the half end of this week. Who knows, right? As long as we know the probabilities, right? So again, if we were to retest this weekly 21 SMA, there's a huge crux to those plans for the price or for the bulls. And what is that crux? Well, the weekly 50 SMA. And guess what? We retested it last week, right? And here is my slight problem with this retest. Well, first of all, we retested it and then we rejected it, and we ended up closing right below it. And on top of that, we got slightly lower volume compared to this previous weekly candlestick, which was, again, to remind you guys, it was a very nice bullish engulfing weekly candlestick. And we had the same volume as well. Obviously, slightly below it, right? So this weekly candlestick was 361, or maybe I can round it up to 361.2 million. And last week was 360 million on the dot. Now, again, there's probably not much of a difference there, but that is a slight drop in volume, right? And to me, that sounds like there is a probability for more room for maybe shorts to get in at this current 50 SMA on the weekly time frame, right? This dark blue line. So, there could be some early on resistance, which is why, again, I've stated that we might be seeing a little bit of a pullback, or at least a little bit of resistance earlier this week in the report as well. And that could potentially set up for a dip buy. But then again, this 50 SMA could be a pretty hefty area of supply, or an area of sellers to reside, to push the price right back down and possibly even retest this weekly 10 SMA. So again, that was a lot of words there, but just to keep it short, right? We may see yet another rejection at this weekly 50 SMA, as we saw right here in March, in the early to mid-March. And we can see another retest of this weekly 10 SMA as a new area of SMA support, which will, again, further confirm that we're in a new uptrend if we decide to hold above this weekly 10 SMA, and that can restart, or at least continue this uptrend that we've been having. And finally, we can potentially see a retest, or a converging retest of 574.50 along with the weekly 21 SMA. Now again, that will only happen if and only if we decide to come back down after we reject this weekly 50 SMA, and then we hold after we retest this weekly 10 SMA, this red line. All right, so that is kind of our short to mid-term perspective or projection that we need to look out for the S&P 500 ETF. Now, on the daily time frame, okay, if we take a look at the RSI, right, we're slowly trudging up higher towards that overbought value of 70, right? So we're about to just hit 60 here, and most likely we'll hit it earlier this week, depending on how we move and depending on what probabilities could occur based on that weekly time frame analysis that I've just given you guys. So with the S&P 500 here on the daily time frame, there's not much divergence from what I've just told you guys on the weekly time frame, but there's still a better chance from just this daily time frame perspective that we can at least even come back to retest that lower range area, or lower range support level of this supply area from 474.50 to 470. So maybe right underneath 570 to 574.50 is what I meant to say. So we might just be able to hit 570, or maybe just slightly miss it underneath this 570 lower range support level. And once that occurs, I'm sure the RSI will be above 60 or nearing 65 at that point. And then we can see a solid rejection into the rest of the week, or maybe again this might happen later on into the week as we have more important catalysts, which I have again put in the report itself. So again, as a last reminder, make sure you guys read the report first. All right, so now with all that being said, if we were to see a dip in the markets, I would love the markets to come back down to retest this 549.50 level, or as I previously mentioned, this 550 level if you just want to round up. Why? Well, If the drop is quick and massive enough, maybe filled with some gap downs, we can't see the price coming back down to hit this major level and retest it as a new level of support. So again, that will turn this into a green level for me on my own daily time frame chart. And also, it will be a nice convergence point as well with the daily 10 SMA. And at that point, the daily 21 SMA here will start to curl up higher because right now it is flatlining, which is a very good sign, and that's what I've been talking about all of last week as well during the streams. I want to see the daily 21 SMA to flatten out because that will be a great sign that it's ready to finally curl up higher with the daily 10 SMA, and it can continue to be a very good short-term motivator for the price to continue to move up higher, right? Because again, these two are my momentum short-term SMAs. All right, so once again, if you guys are looking for any type of a dip buy opportunity in the markets, 550 will be your number. Okay, so with that in mind, let's take a look at our swing trade idea, our official swing trade idea for this week in this week's report. Twilio, okay, ticker symbol TWLO. Now, why have I chosen this? Well, I gave you guys an entire fundamental and technical analysis breakdown, a top to bottom or top-down analysis on this name. So please read the report on this ticker, right? Now, from a technical perspective, strictly speaking, I have chosen this one because, well, it's been one of the very strongest names out there when we're taking a look at software stocks, right, in particular. So first of all, if you take a look at the MACD, right, the reason why I want to show you this one is that, well, the MACD has officially curled to the upside and is now starting to expand to the upside as well after having that nice crossover here that we want to see on the MACD. And obviously, we don't really need to see this. We can obviously tell that the momentum has flipped to the upside as we have broken higher with higher highs and higher lows, giving us a nice new uptrend. Now, like with the overall markets, Twilio also has a previous pivot point that needs to get rid of, or at least get past, right? And that is, well, this previous pivot high point right over here, right? So the highs right here on this candlestick, which is at 108.97, which is the high of the day on this daily candlestick. Now, obviously, I'm not saying that we can get past this very easily, this previous pivot high point, but if we don't, right, if we really don't, then we can possibly be seeing a very nice descending consolidation to occur after this nice move up higher has occurred already, right? So we kind of went from 79.50 all the way up into 104, which is a very major level of resistance, which is also a very major previous level of support seen here last year and early in this year in January, right? So with that in mind, okay, I was thinking that Twilio could be a potential early recover back to its previous highs, right? An early recovering name back to its highs. Why? Well, first of all, during this entire market debacle, the price was able to stay above and at least stay right underneath the daily 200 SMA, right? It's tried multiple times here for the entire month of April, right? And it came back down to retest yet another major level at 79.50, and it held it very, very well. And again, this is a huge level in 2022, okay, seen here, right? So the 79.50 level, very, very significant level that the price was able to hold, and it continued to stay above it for all of April, and ultimately it ended up pivoting away from it and never looked back, right? And it was able to stay above the daily 200 SMA as seen here again, and ultimately we began to move up higher and higher and higher. And then earnings came around last Thursday, and there's a nice positive reaction back over 104 initially. I believe, from my memory, it was around 105 or 106, and it continued to kind of consolidate between that those two whole numbers until the following morning on Friday, last Friday, it opened up at 102.68, ultimately making a high at 104.25, which is again a very important level. Okay, and so what do I want to see here from Twilio at this point? Well, I would much rather see, rather than another rejection back down where we have another lower high point, a lower high pivot point compared to this previous pivot high point. Okay, I want to see a very nice bull flag forming. Okay, something that looks like this, a very nice tight Momo bull flag. Okay, and again, what does that mean? Just a momentum build bull flag that can give us that next leg up higher move back to the previous highs and ultimately breaking over this previous pivot high point. Right, now why would I want that? Well, because again, based on how I'm looking at the markets and based on my analysis on the markets, Twilio would also be very much influenced by how the overall markets move, because it is a leading software name in a leading group, which is software. And this name will do really well if it's able to consolidate and tighten up in a nice Momo bull flag, giving us a potential breakout to the upside. And that's the reason why I give you guys the first entry point over 104.10, because again, if we move tightly and consolidate underneath this major resistance level, we can have a very nice clean breakout over 104. Okay, now here is the second probability to this swing trade idea, right? So as seen here, which also involves this previous pivot high point, we have a very nice little tiny bulging cup here, right? And then we have yet another cup here as well, right? And if you guys know where I'm going with this, right? We are looking at a potential inverted head and shoulders chart pattern, which is again a complementing bullish chart pattern as what I've just described to you guys with that potential tight Momo bull flag. But this is from a more macro perspective, since we're involving a lot more data here, and we have a very nice potential inverted head and shoulders chart pattern, which is again a bullish chart pattern. And this inverted head and shoulders chart pattern will also have a neckline resistance at this 104 level. So what does that mean? Well, we need to actually start developing this right shoulder, right? Again, this is the left shoulder, the inverted left shoulder, the inverted head, and now we have this bulging cup here, which is the inverted right shoulder. Okay, so this inverted right shoulder has yet to begin to form, but if it did begin to form, I wouldn't be surprised if the markets also pull back for this name to come back down and retest that previous significant level of support sitting right at $94, which is the reason why I give you guys an entry point, specifically a bounce entry point at 94.20 for confirmation. And at that point, if we were to come back down to retest this level, I would really want this price to hold this level, because again, in the left inverted shoulder, that's exactly where the price held multiple times. Now, obviously, there's another level here that we need to talk about, $97, because, well, Thursday and Friday, the price respected it twice, right? So on two separate trading days. And so this $97 level can be breached, but it absolutely has to hold $94, which is why there is currently an area of demand that has formed from $94 to $97. Okay, so we need to hold $94 if you want to make this inverted right shoulder, and that goes the same for that Momo bull flag. All right. Okay, so I have given you guys the full fundamental and technical analysis, that top-down analysis in the report, along with the specific option contracts I want you guys to look at to execute on this trade idea, along with the entire more detailed 3-point game plan for this ticker. All right, so please go ahead and head on over to the report for this week to read the full breakdown on this swing trade idea. Alright, so that is it for this video. If this technical analysis video was insightful and most importantly, applicable, make sure you hit that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. And also, if you are watching this video a day earlier, when you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will automatically give you complete access to the private CFO Discord community where you can expedite and further your learning in trading. All right. If you have any questions, make sure you DM me on Instagram at chartsfocus1. But then again, if you guys are looking to join, all you guys need to do is check out the link in the description box down below. Good luck, and I'll see you all tomorrow morning.